Galantas has been around for a long time, but this is now very much a new story in the gold market. I will be making forward-looking statements, as all of us do, of course. In summary, over the past few months, Galantas bought 2 gold mines in Chile as the first steps in building a multi-mine gold producer. Very briefly, how we got here. A year and a half ago, as the gold price started moving higher, 3 industry veterans got together with the objective of pulling together some gold projects and building a gold company. There was a mining engineer, a geologist, and myself. We were looking for projects that had near-term production potential, a low capex to get into production, and most importantly, that they have large-scale exploration potential. We reviewed over 100 projects. Our focus was on Chile, in part because the country has very strong mining culture, a lot of support for mining, and we had strong connections and experience in Chile. So last fall, we locked down the first project, a small gold copper mine in the very prolific Andacollo region, in the very prolific Atacama region. And at that time, we teamed up with Galantas. So Mario Stefano, the CEO of Galantas, shared our vision to bring together a number of gold projects that were accessible, near-term production potential, and build that into a multi-mine gold producer. Mario has a track record of building successful companies. Dusty Nickel, the geologist part of our team, was involved in several very significant gold discovery and development stories. And Robert Sedgmore, the mining engineer on the team, has built a large number of mines throughout South America. And myself, as a co-founder and chair of Metalla Royalty, I was part of the team that built a billion-dollar company. So we have all the skills and experience necessary to build a gold company. Our first project, Indiana, is permitted for production. The capital cost to bring this mine into production is very low, a few $1 million. We're going to take advantage of existing underground development. The ore initially will be processed at a custom milling facility, so we don't need to build a plant. And the initial production level will be about 15,000 ounces of gold a year, along with about 5 million pounds of copper. And that production is expected to get underway this year. Now, at the current metal prices, that production level represents US dollars, $90 million of annual revenue. There's a lot of scope in that to generate a lot of cash flow. But the key point here is that current resource and production level is just the starting point. On this chart, that red area that's outlined represents the existing resource. There are 6 other areas that we've already identified on the property that have potential to evolve into additional resources. And to put this in a perspective, Lundin Mining's Candelaria mine, which is one of their main operating mines, is located nearby in a similar geological setting. So as that initial small-scale production gets underway, we're already developing plans to grow the resource, increase the production level. We're going to build a plant on site and turn this into a pretty significant producer over time. Now, earlier this year, Galantas made a second acquisition. Andacollo Gold produced 1.1 million ounces of gold before it was shut down with a gold price at $1,200. Andacollo Gold is immediately adjacent to a mine operated by Teck. And as Chen noted, in January, when we announced this acquisition, the stock was halted and has just begun trading again after we filed an updated technical report. Here's the summary of the resource from that technical report. Now, to be very clear, at this time, Galantas does not own Andacollo Gold. The deal is subject to shareholder approval, which will come at a special shareholder meeting in June. Now, given the activity and the strong support in the market over the last couple of days for the Galantas shares, we think that investors like this deal, and we don't see any problem getting shareholder approval when that meeting comes in June. So with that caveat, here's Andacollo Gold. So this recent mineral resource estimate, just the bottom line summary, is all in, the indicated, inferred together represents 6 million ounces of gold with the details here. Now, this is a recently updated resource. It's been approved, vetted by the exchange, and now filed on CDAR. So pretty solid resource estimate. Now, if we look at this, Teck's Carmen de Andacollo mine is above that dotted line, which represents the property line. And for scale, that heap leach on the bottom of the picture is 1.6 kilometers long. The recovery plant, shown there, ADR site, in the bottom left of the picture, it's mostly intact, and work is presently underway to refurbish the plant and to replace the components that we need to replace. Permits are in place to begin production, and one of the first tasks that we will have to undertake is to dewater the pit. Now, anybody that knows about mining in Chile will understand that we've got the opposite problem to a lot of other mines in Chile which face water shortages. We have data from a decade of past production. 230,000 meters of drilling have been conducted on the property. We've got a very strong database to support the restart plans. The initial target is to match the historic average production of about 90,000 ounces a year. The process plant has a capacity to handle up to 200,000 ounces a year, and so we're going to be working diligently to increase the mining level to fill that capacity. And there's a lot of upside potential beyond the 6 million ounces that we've already identified. The deposit is open in all directions. There are targets outside of the resource area. There's a lot of ounces remaining in that leach pad, some of which we believe can be recovered. And there's copper on the property, and that copper has never been quantified. Now, one really intriguing aspect of the potential upside on this property, if you look at this, on the left side is the pit outline that was used to establish the resource estimate. On the right side is Teck's Carmen de Andacollo pit. The property line runs right down between the pits. So that area shown in orange represents 1 million ounces that's been delineated, but is not included in the resource because it can't be accessed with the current pit design. Clearly, we're looking to work with Teck to find a way that both companies can optimize their respective projects here. Just quickly on the capital structure, a lot of shares outstanding. This is pro forma after closing of the Andacollo acquisition. But what's really important here is on the right side, where it's a solid shareholder group, if you add up those few participants, it represents 72% of the pro forma outstanding shares. So putting all this together, we're within sight of 100,000 ounces a year of production for the company, a lot of upside beyond that. What's that worth in terms of valuation? Well, a really good example is Rio 2, which has two projects, one in Chile, one in Peru. They look a lot like our projects. They're a little further advanced, but the value of Rio 2 at this moment is $1.6 billion. We're not there yet, but that's a target for us to advance our projects and get the sort of valuation that Rio 2 is enjoying. Mario and I will be here today, tomorrow. Come by. Any questions? Glad to talk to you. Thank you so much.